guys, and welcome to this week's episode of Real Estate Rockstars. I'm Jennifer Wise.
And I'm Amber Carpenter.
And we are both licensed realtors with Century 21 The Hills Realty in Kerrville. And on this week's episode, we're going to be discussing the steps to getting pre-approved for buying a home. And our special guest today is Jeff Fierst with Texas Hill Country Bank. And before we ask some questions, Jeff, why don't you tell us a little bit about your bank?
Well, thank you for having me here first. I work with Texas Hill Country Bank. We are a member of the FDIC, and we are an equal opportunity lender. We offer a variety of different loan products, banking products, but primarily I work in the secondary market loans. So,
And can you tell us a little bit about what that means?
secondary markets, when someone is looking, when you guys find a home for somebody, they're going to come to me, and I'm going to provide them with secondary financing, the home loan for their buying process.
Awesome. Well, Jeff is just one of the many great lenders that we have here in Kerrville. So if you have any questions, comment below and reach out to Jeff. We'll put his contact information in the link below. And we are going to get started with some tough questions for Jeff.
Okay, so our first question today. Jeff, tell us, what is the difference between getting pre-qualified for a loan and pre-approved?
So the pre-approval process is made up of two different ways of doing it. Someone can come in and we can sit on down, we can verify their income and asset documentation. I'll look it over, and then based on 25 years of experience, I can render a conclusion as to whether or not I think they're going to be approvable or not.
So is it safe to say that it's based off of the verbal information that they give you prior to it being verified with hard documents?
Yes.
Okay.
So the pre-approval would mean that they actually brought in documentation. Neither one, though, is a guarantee for the loan, because they're going to have to go through the appraisal process, they're going to have to go through the survey along with the title process. And so there are other conditions before the loan will actually be approvable, of which is underwritten by an underwriter.
Got it.
So the loan officer is just the first line that they greet
Okay.
in that process.
Very good.
Sounds good. So what documents do you need to get pre-approved? What would a buyer have to bring in to you?
Another very good question, because there's such a difference of, some people get royalty income in our county here. Some people will bring in pay stubs, bank statements, tax returns, W-2s. So we'll gather that information, and depending on what they're looking to borrow, we'll determine what they can qualify for.
Okay.
So how long does the pre-approval process take, and is it something that somebody needs to come into the bank? Can they do it online, on the phone?
They can do both.
Okay.
So again, the pre-approval process can be over the phone and face-to-face, and it usually takes 15 to 20 minutes.
Okay, that's not bad at all, is it?
No.
So there's no
Crazy.
reason to not get pre-approved, right?
There's no reason at all. It actually gives the buyer confidence, and it also emboldens them to go out and to stay within their range. So the old saying that people have champagne taste on a beer budget, well, that applies a lot.
Yeah.
And there's times where people are really hesitant to go out and they can afford a lot more. So we try to, again, educate them on what they should be looking for and what's best for them.
True. Well, then that leads us to our next question. Should a buyer get pre-approved prior to even going out and looking at homes, or wait until they kind of narrow it down to the one they want?
Unless they're paying cash, they should always be pre-approved prior to.
I'm sorry, can you say that again loudly?
Hopefully they're not paying cash, because then there's no need for the bank. But in every other aspect, they should definitely go in first, because again, they need to know that they are qualified. It also assures the seller, once they get the pre-approval letter, that that buyer has gone out and done some homework with their.
That's accurate.
Yes.
Yep.
And that's very important right now in the seller's market that we're in. When a seller has brought offers, or in some cases multiple offers right now in the market we're seeing, it's going to be a requirement. Those sellers now are requiring pre-approval or pre-qualified letters from lenders if that buyer is using financing. So the last thing you want to do is be in a bid war with an offer that has no financial assurance to that seller. So you really want to come in strong with
And
it.
in some price points, they're not even letting you preview their home without
That's
that
right.
pre-approval letter from your bank.
That's right. In our fine homes and estates market, you can definitely see that with sellers. They want to know ahead of time before you step in their house
Sure.
that you're a good buyer.
Okay, so let's move along. We're going to talk a little bit about credit scores now. So how does a person's credit score affect their ability to get qualified, and what's kind of the minimum credit score?
That varies. There's different loan programs available that encompass all different FICO scores, credit scores. certainly the better the credit score, the easier it is to get qualified. Because your credit scores are a history of how you repay your debts. And so therefore, everybody has credit scores as long as they've had either a credit card or they have a installment type of debt. But certainly the better your credit history is, the easier it is to get the loan.
Okay. So what would you say is the bare minimum for?
That's a good question. The bare minimum for the conventional secondary market is going to be 620.
620. Okay.
Yes. For an FHA loan, it could be 580.
Okay.
But most lenders will want an FHA, a USDA loan, they're going to want 600 and above.
Sure.
And some 640 and above.
Well, and that credit score is going to adjust your interest rate as
Very
well,
much
right?
so, yes.
Is that the primary factor of the loan that it affects is interest rate, or are there other aspects of the loan it affects?
Well, since there is a minimum credit score, it can actually affect you regardless of how much money you make or how well qualified you are. If your credit score is not within those parameters, you won't get a loan at all.
Okay.
But it's a credit risk grade is what they look at it. So yes, it does affect interest rate, and it can affect it quite a bit.
Okay.
Well, you mentioned a couple of different types of loans. What loan packages are actually out there right now? Just briefly, maybe your top 3 or 4, and what's the difference between them?
The top is the conventional type of Fannie Mae, Freddie Mac, secondary market type of loan. I would say the 80 to 90% of all the loans that I do fall within that category. There are 3% down programs, there are 5% down, there are 10 and 20 and 30 and everything else. So a borrower does not need 20% down in order to qualify for a loan. A lot of people are fearful that if they don't have the 20%, they're not going to qualify.
Okay. And that's all within the conventional loan realm?
Yes.
Those different.
Then you have the USDA loan, which is available in all of Kerr County. That's 100% financing. And then you have the FHA loan. The FHA loan is not nearly as popular as it used to be because of the conventional 3% down programs and the USDA program.
Okay. Very good. So do different lenders have different interest rates? Do they have different products?
They can. Competition really dictates what the interest rate is going to be, but a lender may charge whatever they can get away with. So you definitely want to have confidence in your lender.
So there's no guideline to keep, say, lender fees from going sky high. There's nothing there to cap that, so a buyer would want to shop.
There's predatory lending laws, but most of the time Fannie Mae and Freddie Mac don't allow you to participate in that type of lending. But there can certainly be an 1/8 to 1/4 difference, which can affect the payment for however long they have that loan. So it's very important.
Well, what would you say to a buyer that has bad credit? What are their options if they have some derogatory marks on their credit?
It depends what they are.
Okay.
So late pays, sometimes only time itself can heal paying late. Sometimes there's a bankruptcy. Again, time, because it depends on, it can range from 3 to 7 years as whether or not a lender will do a loan for someone with a bankruptcy and or a foreclosure. Sometimes it's credit balances to credit limits. That's probably the easiest one to fix.
To cure, sure.
Exactly right. Just pay down those balances. You try to get them within, say, 40% and or less of what is owed on the maximum credit limit, and your credit scores will be affected immediately once that creditor reports the fact it's been paid. So usually 30 to 45 days.
So if somebody were to come in to talk to you about getting a loan and they had some things that they needed to work on, is that something that you or Amber could work with them? Amber's another mortgage lender at Texas Hill Country Bank. Is that something you can hold their hand and show them the steps to do to get to where they need to be?
Again, we will ask to run, we'll get authorization to run their credit report. Amber's my associate, Gwen is the processor, and we will help walk them through those steps.
Okay, that's good to know.
Okay. I think you're next.
Okay, let's see. So, do you have any tips or advice for a buyer once they've received that pre-approval? Maybe some do this, don't do this.
Very much so.
Yeah?
I remember years ago in California, I gave a pre-approval out to a gentleman. He quit his job and the day before he went to closing, he told me he didn't have a job. So when you apply for a mortgage, it's with the thought that the things that you're doing today are going to be the same at closing. Whatever happens the day after closing is okay.
Yeah.
Go out and buy that new car. Go out and get a new
that
job.
washer and dryer.
That's right. But don't do those things prior to closing, because everything is predicated on the information that was provided to us prior to.
Okay.
Refrain from using the credit cards, because even if you pay them off monthly, depending on the billing cycle of that lender, it may report that you have a balance. Even though it's paid off, it hasn't caught up yet.
Yeah, that's right.
So,
So
definitely.
we've mentioned about shopping with lenders and sort of doing your homework. Will shopping lenders affect a buyer's credit score negatively?
Yes.
How can it?
Very minimum though.
Okay.
So when you go out and you're applying for a car loan or a revolving debt like a credit card, that will negatively affect you more so than a mortgage loan. So they're just coded differently. So a mortgage loan is going to affect you about 1 percentage point within a 45-day period of time.
Oh, not bad.
Not bad, but if you're at a 679 and that cutoff for a better rate is 680, that 1 point can affect you tremendously. If you're in the high 700s, low 800s, then that 1 point is not going to affect you at all.
Okay.
So until we run the credit, we don't know where you are. So again, refrain from having other people run your credit because you have given them personal information that you don't necessarily want to share with everybody.
And that includes requesting increases on your credit cards,
Very
correct?
much so, yes.
Because they will hit that again, am I correct?
Yes, and that is a revolving hit. And therefore that can affect it 2, 3, 4 points.
Got it.
So very important.
Do you have anything else to say?
Yes, we have a lot of lending experience at Texas Hill Country Bank. So if it's not a secondary market loan, it may turn out to be what we call a portfolio loan. So it really is a one-stop shop for the home loan experience.
Wonderful. Well, that's it, guys. Thanks for watching this week's episode of Real Estate Rockstars. Make sure to like both Amber and my Facebook pages so that you can get notification of next week's show. And remember, we can give you 21 reasons to work with us.
But you're only going to need one.
Bye.
Bye.
The process, we're going to have to cut that one out. I should have been a little bit more. You can cut this out, right?
Okay.